one thing is for sure, and that is that it will be inflationary. And so the misery caused by inflation is about to go hyperbolic.
Let me start by saying hello and inviting you all to today's edition of the Daily Crypto. We're back with another video, and this time we've invited Max Keiser to break through the Bank of England debacle and explain why the United Nations has asked the Federal Reserve to reduce interest rates. But first, let's check today's readings on the Fear and Greed Index. Currently, it is at 20, down from yesterday's high of 24 when this video was recorded. Bitcoin is currently trading at around $19,100 while Ethereum is at around $1,297. Once that's out of the way, we can begin the video.
Right, so a few things. Number one, the response by policymakers in the UK, the Bank of England getting involved, essentially was a bailout for BlackRock. And this reminds me back, when Gordon Brown was the Chancellor of the Exchequer, and he stole 300 tons of gold on behalf of the British people to bail out Goldman Sachs at that time. And here you have the Bank of England once again stepping in and bailing out a big Wall Street player. In this case, it's BlackRock. And the strategy, whatever strategy they're using, I can tell you that number one, it uses derivatives in a reckless manner. And every time derivatives are used recklessly, there is a crisis, there's a failure, there's a counterparty issue, and they need a bailout. But the bankers over at BlackRock or the bankers at Goldman Sachs get paid on the volume of deals, not whether or not the deals make any sense or make any money. It's all deal volume. Volume pays. They typically make huge mistakes, and then they get bailed out, then they get another payday. So it's in their best interest to just be as reckless as possible.
Max claims that what the Bank of England is doing with their bond markets is comparable to what we suggest the United States government do to bail out Goldman Sachs. The only difference is that this time, it's BlackRock that is being bailed out.
No, you make a good point there. The names of these products change all the time, but the underlying reckless derivatives composition of the products is the same. It reminds me of that scene in the great TV show in America called The Wire, where you see the peddlers of heroin would go around the street and call, hey, I got your WMDs, I got your WMDs. And every week or so, they would change the name of the heroin. It doesn't change the fact that it's basically the same heroin and it's killing people. Here you have Wall Street selling derivatives. They're the same derivatives. They're over leveraged by 100, 200%. They're underlined by nothing except counterparty risk that's insured by bankrupt insurance companies. And it results always in the same thing, financial death. So nomenclature is important because it makes it easier to sell stuff to unwitting pension fund managers. In the case of the UK, their pension funds were under threat because the manager of those particular funds was completely incompetent, as almost anyone who runs a pension fund is incompetent. It's the very definition of what's called dumb money. The entire financial world is divided into smart money and dumb money. BlackRock and Goldman Sachs are smart money. They get paid no matter what. Pension funds typically are dumb money, and they're called dumb money on Wall Street, and those guys always end up eating a bag of worms.
What we are currently witnessing in the stock market is Wall Street selling excessively leveraged derivatives to individuals, which, in the event that something goes wrong, have the potential to backfire in a very negative way. The Bank of England is acting in the same manner and is imitating the United States in this regard, which, of course, will prove to be counterproductive in the long run and will have an impact on market sentiment as well as the economy around the world.
Right, as we've been saying now for a number of years, there's two policy errors you can make. One is your interest rates are too high. The other is your interest rates are too low. Now, where was the UN 10 years ago, 5 years ago, when the central banks were coordinating a massive downtick in interest rates, even into negative territory, and moving trillions of dollars out of the pension accounts and savings accounts of mom and pop, of average people and the working class to fuel the bailout of the financial speculators on Wall Street? Where was the UN during that financial crisis that caused trillions of dollars worth of damage? Okay, suddenly in 2022, interest rates are high, and they're saying, oh, what about all this damage from the artificially high interest rates? Here's a message to the UN. shut the central banks down completely if you want to eliminate these problems and let the market decide, as it had been doing before central banks were invented. That's the solution.
Max contends that it is very self-serving of the United Nations to suggest that the Federal Reserve reduce interest rates because the same thing occurred during the global financial crisis that began in 2008. The majority of people in the working class had their savings confiscated by the government, and the funds were then given to financial institutions as a form of rescue. One of two things must be wrong with a country's economy: either the interest rates are too high or they are too low. Neither of these things can be both true. Max believes that the only way to solve this issue is to do away with central banks entirely because they hold much too much power.
I think the answer is, if the United Nations is suddenly making comments about central bank policy, then they're telegraphing that there's going to be a global roll-up of some type.
Yes.
You know, we talked about the special drawing rights. Jim Rickards was talking about this for a number of years, but now they have the CBDC, the central bank digital currency, which is the more likely go-to. So there'll be a global coin. It'll be a $100 trillion or $200 trillion credit facility. All the bad debt on all these central banks all over the world, including the euro, will be rolled into this new CBDC, a global bank. The United Nations obviously seems to think that they're going to have a role in all of this. And it'll be another kicking the can down the road. But one thing is for sure, and that is that it will be inflationary. And so the misery caused by inflation is about to go hyperbolic.
In a strict sense, the United Nations has no authority to request a policy review from the central bank. However, there must be a reason why they are asking for it, and that reason is because they can foresee a potential financial crisis if things continue to move in the same manner that they are currently proceeding. A significant number of market analysts are discussing it and advising investors that it might be on a far larger scale than the financial crisis of 2008.
You know, the CBDC, the central bank digital currency, is a response to Bitcoin. Bitcoin changed money forever. It disintermediated central banks, it disintermediated all payment systems, and their response is to double down on their surveillance technology and to double down on all the worst features of fiat money by making them even worse. And so this is the beginning of a fight. It's a fight between the old guard, the old regime of fiat money and CBDC versus Bitcoin, which is perfect money.
While many governments are trying to push out central bank digital currencies, Max says it is a vain attempt at blocking Bitcoin and trying to control people. However, it could very well have an opposite effect, which could result in even more Bitcoin adoption, as people will start to realize that CBDCs are basically the digital version of an already dying fiat currency that is destined to fail.
Bitcoin is the non-violent form of the guillotine. In other words, right before a major revolution, the elites got a little too uppity and they had to be dealt with. Now, Bitcoin is nonviolent. Bitcoin simply replaces the tool of their terrorism, fiat money, for freedom and individual sovereignty. And so we can look forward to something similar historically. All the wheels of history tend to turn similarly every cycle, and that's what we have to look forward to next. And now we have Bitcoin.
Max believes Bitcoin is the only way to move in the future, as it gives normal people to control over their finances, which the governments have taken away over the last few decades. Since there is no central issuer, people can actually take full ownership of their digital assets without having to worry about banks and other third parties seizing or freezing their funds. We appreciate you taking the time to watch this video. Make sure to give the video a thumbs up and subscribe to our channel so that you can remain informed about the most recent happenings in the financial market. Because we post new content on a regular basis, please ensure that you click the bell symbol so that you are notified immediately of every new upload. I'll catch up with you all in the next video.